It is, Andy, the only way I can think of. We've done this before in the decade of the 70s. I was there. We reduced the purchasing power of the US dollar, according to the Office of Management and Budget, by 75% over 10 years. Not coincidentally, the gold price went up 30-fold. I'm not suggesting, and I don't want to see any clickbait headlines from the people who rip off your content. I'm not suggesting that the gold price will go up 30-fold. I am suggesting that if the purchasing power of the US dollar declines by 75%, which I believe it will, that the nominal price of gold will keep pace. And that isn't the $3,000 number. It's a much higher number.
Rick Rule, good morning to you, my friend. How are you?
Life is good, sir. The better for being on with you.
Yeah, thank you. Really good to see you. So really, let's get into it. Gold and silver are ripping, what I would say ripping, and I wanted to ask you why that is the case. It's very resilient right here.
You know, in prior interviews, I've told you that I didn't own gold because I thought it might go through 3,000. I owned it because I was afraid it would go through 9 or 10,000. Very different motivations. Gold traditionally does well when people are concerned about the maintenance of their purchasing power in other savings and investment products denominated in fiat currencies. The reason that I think that gold is starting to work is because people are starting to pay attention to the math. First of all, the US 10-year Treasury is paying just over 4%. In a currency that I would suggest is experiencing deterioration of its purchasing power, more like 7.5% or 8%. Which means that by receiving 4.2%, you are really losing 3.5% or 4%. There's nothing that would make people more concerned about the deterioration of their purchasing power than experiencing it. If you give the US government your money for 10 years, they solemnly swear that they will make you 3.5% poorer every year for 10 years. The first government promise of my life that I believe that they will keep. What's the math behind that? Well, that's pretty simple. The on-balance sheet liabilities of the U.S. government exceed $36 trillion. According to the Congressional Budget Office, the net present value of unfunded federal promises, little things like Social Security, Medicare, Medicaid, federal government pensions, military pensions, according to the Congressional Budget Office, that number is $100 trillion. To put that in perspective, the gross federal budget before they spend a dime, gross federal income, pardon me, is $5 trillion. So we owe $130 trillion, and we propose to service that with a budget where our income is $5 trillion. What on earth is Congress smoking? The only way out of this circumstance that's politically feasible is to honor the nominal value of our federal promises while inflating away the net present value of those promises. It is, Andy, the only way I can think of. We've done this before in the decade of the 70s. I was there. We reduced the purchasing power of the US dollar, according to the Office of Management and Budget, by 75% over 10 years. Not coincidentally, the gold price went up 30-fold. I'm not suggesting, and I don't want to see any clickbait headlines from the people who rip off your content. I'm not suggesting that the gold price will go up 30-fold. I am suggesting that if the purchasing power of the US dollar declines by 75%, which I believe it will, that the nominal price of gold will keep pace. And that isn't the $3,000 number. It's a much higher number.
Great answer. I'm laughing not at you. I just kind of said that better, and thank you. So thank you for that. Well, obviously then I will say this, it leads me to say that this is going to be a raging bull and is a raging bull in precious metals. And that shows the resiliency really that you're seeing here recently. Is that what you would, I don't want to put words in your mouth. Is that what you would say then, just these recent?
You know, the age-old test is that an ounce of gold, 30 grams of gold, buys you a very, very, very nice men's suit. That's true today. and it'll be true 10 years from now. $3,000 US will not 10 years from now buy you a fine men's suit.
Right.
Ripping bull market. How about maintaining your purchasing power? It may be that gold outpaces the deterioration of the US dollar. It's done that before. It did it in the period 1970 to 1981. It did it again in the period 2000 to 2010, which is to say, in 2000 to 2010, the gold price was up sevenfold. But my suspicion is it will feel like a ripping bull market because the deterioration of the purchasing power of the US dollar will prop the nominal price of gold. Or, put more simply, I feel much better owning it than not.
That's probably the best answer you could give right there. Well, let's do this. I'd love to talk about stocks next. And before we do this, I want to give, really, when I first had you on, it's been about 2 years ago, and you told me you invited me to your conference. These companies I'm going to ask you about, all of them, I want to say all of them were at your conference last year. Since that conference, I've become an investor in a few of them. And I've been very, very happy. Now, granted, you are not a trader. You don't take a 3-month position. Correct me if I'm wrong, or a 9-month position or a year position. You take a position because you really like the company for a plethora of reasons. But I wanted to give a shout out to all that. I've been very, very happy in the past year, and it's been more than worth my time going to the conference. But tell me about the conference first, what you got going on in July.
Well, first of all, it's the nicest possible thing you could say. We've been putting on a conference for almost 30 years because we enjoy the process of helping people become better natural resource investors, period, full stop. And your satisfaction is the nicest possible thing that a conference promoter could hear. A word about the companies. Unlike any other investment conference that I know of in the world, the qualification to be an exhibitor at our conference is that your stock has to be owned by the conference sponsors, including myself. There's no guarantee, Andy, unfortunately, that because I own a stock, it goes up. I certainly have made mistakes in the past, and I will certainly make them in the future. But the process is honest. At every other investment conference, I know the qualification to be an exhibitor is a check that cashes. Not a very tough test, although some exhibitors fail. The other thing that's, I think, unique about our conference is we have an absolute gold-plated money-back guarantee. If you attend our conference, either in person, which is what I would prefer, or in the comfort and convenience of your own home via live stream, and you don't think that we have delivered the value that we have charged you for, we will, no questions asked, give you a 100% refund. That's been our policy for 30 years. I'm delighted to say we've had to refund less than 1/10 of 1% of the tuition that we've charged. But the truth is the financial risk is all mine. If you come to the conference, either live or via live stream, and you feel for any reason that we didn't give you your money's worth, we'll give you your money back. Nobody else I know of has that guarantee.
Excellent. And I will put a link to all those that want to attend the conference. I'll put that in the show notes below. One of the, speaking of the conference, one of the CEOs at the time, and now he's the chairman that I met there, was Luca Mining, Javier at Luca Mining. Very impressed with him. I had him on the show. We talked about him about 9 months ago. After we talked about them, I did not buy him before we talked about him. I bought on some weakness, as just what I do. And I've been very, very happy. Tell me about your thoughts on Luca Mining. And I don't want to put words in your mouth. So what are your thoughts on Luca Mining?
Well, I am a shareholder of Luca Mining, and I similarly am impressed by Javier, the chairman, who is also, of course, the largest shareholder. I own it because I like Mexico, and Mexico's decidedly out of favor. The political process in Mexico is challenging for mining. There's a straight up pinko as president, and the sociology is challenging too. You have to be able to deal with extraordinary poverty, and you have to be able to deal with the narcotraficantes. Mexico is not an easy place for a gringo to operate, which means ideally, if you're investing in Mexico, you would invest behind a Mexican. And Luca is run for and by Mexicans, hardcore mining investors who I've known a very long time. They have bought two mines that arguably were starved for capital and mismanaged in the past, added capital to them. And their first challenge is to make those mines completely turned around. They are now generating cash as opposed to losing cash. That's good. But they need to show the market that they can buy mines that were mismanaged by gringos, that were starved for capital, turn them around, and generate cash from them. Their second challenge will be then to use that cash flow to explore the on-concession exploration potential, which in the case of both of these projects, I think is very large. Because these projects were both milked for cash by their prior owners, very little on-concession exploration was done. And so after Luca changes the operations around, they have to grow the operations through exploration. The third challenge they have is to rinse, wash, and repeat. You need to make companies in the mining business bigger. You need more scale. More scale gives you more trading liquidity, which gives you a lower cost of capital in a capital-intensive business. There are probably 30 or 40 mines in Mexico owned by Canadian or American or Australian issuers that have been starved for capital and are operated by people who in many cases don't even speak Spanish. The idea that you would operate a Mexican mine in Spanish from Mexico, as opposed to operating that mine from New York City or Toronto or Sydney, makes absolute sense to me. And that's the thesis around Luca. Will it work? I think so. I hope so. I don't know so. To reiterate what they need to do, an operational turnaround at their two existing mines, the initiation of intelligent on-concession exploration, and then the amalgamation of more assets into the whole that is Luca. That's our challenge. If they cause that to occur, if, not when, if they cause that to occur, this is likely a 10-bagger.
I think so as well. And I want to thank you again. I met Luca at your conference. I can't stress them enough. And that conference has made me a lot of money just off of Luca. But let me go to another company that I have not made money on yet, but I'm very optimistic I'll be making money on them. I met them at PDAC in Toronto about a week ago in person, the second time in person. The first time was at your conference. It's West Red Lake Gold Mine. I met with Gwen. She does their IR, and she's very, very informative. I also met Shane, the CEO, briefly at your conference. He was there, and it was really impressed me about them just in person that they were grinding it out on events. They were shaking hands and doing all that at your conference. Tell me about West Red Lake, your thoughts, and all of that.
Well, first of all, they bought the asset very, very cheap. They bought an awful lot of historical exploration work and historical physical plant very, very, very cheap. The other thing you need to know to begin with was with West Red Lake is that the author of West Red Lake, if it were, is Frank Giustra, who has been a serially successful investor in mining and in mine startups for almost 4 decades. I've known Frank as a very long time, as a competitor, as a partner. I've invested with him. He is a fearsome competitor, which means he's a great partner. My nervousness with West Red Lake is I think they put it in production too soon. I would like to see a new feasibility study. If they make it work, they save shareholders $12-15 million in a year. I'm afraid of this circumstance, and so I will be watching their quarterlies like a hawk.
Got it. Okay. Next one I want to ask you about is they've been on my radar a lot. It's Tectonic Metals. The reason they've been on my radar is because of, again, your conference. I've actually had Tony on at your conference, and then I had him on recently And I was somewhat confused and surprised that they've somewhat languished, if you would, but they hadn't had any news come out for a while. So what are your, I'm not an investor in Tectonic, but I want your opinion on them.
I was an investor in Tectonic. I sold my shares and very recently I bought them back. I'm a fan of Tony Rudd. I'm a fan of generative exploration in Alaska. I'm a fan of their technical team. What happened was for years, they didn't put any numbers on the board. And I can be a fan of all that. And if you don't give me a reason to own the stock, I got to sell the stock, which I did. About 2.5 weeks ago, they put some numbers on the board. They enjoyed some exploration success. Is it a mine yet? No. But we have data now that validates the third dimension. We have data by way of drill holes that validates their exploration thesis. And their exploration thesis is big. This is a team that's done it before. So when this team proposes a thesis to you around data, you have the ability to say, this may be true, this may not be true, but it's being proposed and tested by people who have been serially successful in a task that closely resembles the task at hand. Their prior exploration success was gold in the far north. What they're involved in doing now is gold and copper in the far north, which is to say their expertise is relevant to the task at hand. And finally, after several years of trying, they put some numbers on the board. They've given me an excuse to own the stock.
Okay. Excellent. And on that, I am not an investor as of yet. I am doing due diligence. I did like the numbers that have come out recently as well, but I am still considering and owning the stock. But I am not an investor. Last one I have for you is Mondoro Capital. What's interesting about them is a royalty company. I love royalty companies, and I can go down a list of royalty companies with you. But tell me your thoughts on them, if you like them, and why.
Well, I love Mondoro. First of all, I'm a huge fan of Tia, the woman who runs the company. She is exactly what you want in an exploration. She's very bright, she's very tenacious, and she's cheap. She reminds me of a young female Ross Beatty. She throws around nickels as though they were manhole covers. She didn't buy her royalties. She generated them. She caused them to occur. She generates exploration ideas with her team, and she farms the ideas out to bigger companies who do the heavy lifting. Her interest, resulting interest, promoted interest in the company is by way of royalties. This is a $16 million market cap explorer that's cash flow positive. They generate so much money from exploration fees for third parties that they pay their salaries, listing expenses, and audits. In other words, your net general and administrative cost in Mondoro is sub-zero. This doesn't happen in a company its size. And it goes to the reputation that the team enjoys with larger mining companies who invest with them and trust them. It goes to their exploration efficiency. And it also goes to the fact that these people are just very, very good, honest business people. Something very rare in the exploration sector.
Excellent. So on that, Rick, I want to just quickly, if people want to, I know you have your service, which is just evaluating people's portfolios. How do they go about doing that? And just for my money, it's the best value out there. As you often say, it's free. I've had it done, but how can people reach out to you and get their portfolio evaluated?
Anybody who cares about personalizing my knowledge in natural resources is invited to go to my website, ruleinvestmentmedia.com, ruleinvestmentmedia.com. There you have the opportunity to list your natural resource portfolio. And if you do that, I will rank it for free, no obligations, 1 being best, 10 being worst. I'll comment on individual issues where I think my comments might have value. This is absolutely free. There's absolutely no obligation. And as a consequence of it being free, there's an absolute money back guarantee. Since we charge you nothing, we absolutely guarantee value for money. Once again, Rule Investment Media, list your natural resource stocks. Please, no crypto. Please, no tech stocks. Please, no pot or psilocybin stocks. Natural resource stocks only, please.
Yep. I will put all of this in the show notes below all of this on both the YouTube channel as well as Apple and Spotify. Rick, I want to thank you so much for your time. I know you were quite pressed today, but I'm just very, very grateful for your generosity. Thank you for coming up on board with us.
Well, it's my pleasure. Thank you, too, for your prior attendance at the Natural Resources Symposium. I look forward to hosting you there again, and I'll tell your audience once again that money back guarantee. This will be the most important natural resource symposium that we've ever hosted, in particular because our main keynote speaker will be David Stockman, the director of the Office of Management and Budget under Ronald Reagan, the person who watched America's first attempt at making government smaller. He detailed in a wonderful book called The Triumph of Politics how the Reagan Revolution was derailed by politicians. Within 90 days of Reagan taking office, he has written a book much more recently called How to Actually Cut $2 trillion from the Federal Budget. There is no issue more important to American voters and global investors than the U.S. federal budget. No single item is more important. If you are making plans for your future and your kids' future, understand how that future is clouded by debt and deficits. If you are investing for the future, you need to understand how the U.S. federal budget and unfunded entitlements make investing challenging in the years to come. There is no issue that is more important than this. So I absolutely, positively, I encourage you to come to the conference for a whole bunch of reasons. But if you came for no other reason than to understand the dynamics of the U.S. budget from a person who has spent almost 50 years understanding that budget, please come to the conference.
100% agree with that. Everything that you just said. Rick, love to have you on again really soon. I just want to thank you for your time.
I look forward to it. Thank you.
Thank you.